Welcome to the Learning Pines YouTube. We hope this video helps.
In this video, I will explain how to do journal ledger. We'll start by understanding its core purpose in accounting, which is to provide a complete, chronological record of all financial transactions. You'll learn how to properly document each event, ensuring accuracy and clarity. We will also introduce the essential concepts of debits and credits, the two fundamental elements of every entry. Understanding debits and credits is crucial. Remember, debits increase asset and expense accounts, while credits increase liability, equity, and revenue accounts. Conversely, a credit decreases assets and expenses, and a debit decreases liabilities, equity, and revenue. Each transaction must always have equal total debits and total credits, maintaining the accounting equation's balance. Now, let's record a transaction. First, identify the accounts involved, like cash and sales revenue. Next, decide if each account is debited or credited based on the transaction type. For instance, a cash sale increases cash debit and increases sales revenue credit. Finally, enter the date, account names, and the exact monetary values, ensuring debits equal credits. After journaling, the next step is posting to the ledger. This involves transferring each journal entry to its corresponding individual ledger account. For example, a cash debit from the journal goes to the cash ledger account. You'll then update the running balance for each account. This systematic transfer helps organize financial data and ensures the overall accounting equation remains perfectly balanced.
Thanks for watching. Consider subscribing if we helped you.